Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. Now, I started last week's commentary thus, and I quote, "A significant piece of action today, but I will deal with that shortly," end of quote. I will also expand upon that, but also in a little while. First, I want to lay out the overall scene here. So, the false break higher back in late August over the top of the diamond pattern, which I've highlighted in dark blue, and it's in the upper left of the daily chart, formed over November 2021 to July 2022, eventually started a move that led to where we are today. The pipe top formed on the 9th and 12th of September were the direct triggers for the start lower. The actual pattern, the lopsided diamond, is huge. I had a primary target for this in the 166 3/4 area, whilst a secondary, harder to achieve target X1 would be in the 142.40 area. Now, the primary target was achieved in early November, and the harder to reach secondary target, yes, X1, is in the bottom center of my daily chart already. I said at the time when I indicated these targets many months ago, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets." End of quote. I then also continue, and again I quote, "There is one other fly in the ointment. Perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel. If that was to be the case, then the first area to look at below would be the lower bear channel line of such a pattern, currently 168.40, end of quote. The extension of this bear channel you can see highlighted in bright green on my daily chart, and the lower bear channel line has played a significant part in recent actions. Interestingly, more as a resistance once it had been broken than anything else. Though I believe the core of the resistance at the moment is the nearby 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, which I've highlighted in purple. And I will look at this again in more detail shortly as well. So between the extended lower bear channel and the neckline above as resistances, and below by the 2017 high at 159.30, plus the combination of the lesser Fibonacci lines at 153.60 and the May and June congestion at 153.30, well, prices seemed finally to halt their headlong fall in November. Since then, prices have traveled somewhat sideways, and I continue to entertain the idea put forward 2 weeks ago that perhaps this all may be turning into a descending scallop pattern, especially after looking at London coffee, where this seems a more reasonable idea. Now, a spanner was thrown into the works last Monday when in 1 day's action the market made not just an immediate countering key reversal up and bullish engulfing pattern, but also a weekly key reversal up as well, all in 1 day. This action saw prices pull higher up to that 50% Fibonacci line at 174 before peaking and turning down again last Friday with an immediate countering key reversal down, with the lowest close for the whole of last week. Interestingly, this ties in with the idea of a possible descending scallop pattern, but it also sets the possibility of a November to date double bottom pattern in construction. Now, for this pattern to work, it will very much depend, as will the scallop bottom, on what happens at the 50% Fibonacci line at 174, and above all, should we get there again. The first attempt last week failed, and today's indecisive spinning top is perhaps a fitting manifestation of what this market is actually thinking: indecision. Until we break this 154 to 174 prison cell, then nothing will happen, whatever wild and brilliant patterns are produced. Please bear in mind that just in case prices fail again at the 174 area and test down to the 154 zone, that a confirmed break lower below that, then the potential for target X1 in the 142.40 zone, that's the ultimate target in the lopsided diamond pattern of so many months ago, becomes a significant possibility. And coffee. There were in the recent past 2 key relevant features here in relation to the start of the fall of this market back in the summertime. The first was early on. It was the early August till late September type of head and shoulders pattern. The second feature was the late August to mid-October, this falling wedge pattern. The second pattern gave added depth to the fall and saw prices drop in mid-November all the way to the lower tine, currently 1732 of the late December 2021 to mid-July 2022 bearish Andrews pitchfork, which I have conveniently highlighted in dark blue on my daily chart. Since then, we have seen the market curl upwards, though as it has tried to do so, has shown increasingly indecisive patterns, especially over the 2018 high at 1845 and under the congestion at 1897, and above all, especially over the last 2 weeks, when we have seen contrary inter-day indecisive patterns each day, such we have a countering patterns to the 5th degree in the middle of last week. Today, 6 weeks ago, indeed 6 weeks ago, I indicated we might see some of this happen when I said, and I quote, "Look at the 50% Fibonacci line at 1812 and the nearby lower tine as the end of the current move lower, leading to some possible consolidation before a possible attempt up towards the congestion overhead starting at 1945. End of quote. I did go on and lay out some other possible scenarios involving similar patterns, but you get the gist of what I was saying and what I meant. Thus we come to my commentary from 2 weeks ago when I put forward a new suggestion on what may be happening. See, looking here and also at the New York contract, I have a suspicion that the action since mid-October may be sliding towards being a descending scallop pattern, sometimes called a backwards letter J pattern. It is still early, but especially here in the London contract, this idea has merit, and I'll expand upon this idea further should it and if it develops. Finally, I would like to finish by reprising my final point from 5 weeks ago, and I quote, "I'd like to point out 2 potentially impactful factors that are rapidly approaching the market from below. They are highlighted in pink, and they are the January 2021 to date uptrend, currently at 1739, and the October 2020 to date uptrend, currently at 1730. By the end of December, they will mix in with the congestion zone 1740 to 1746 that contains the August 2021 low at 1743, which may make for an interesting time, as the lower tine will be down there as well." End of quote. Since last week, nothing has changed in how I view what is going on. A descending scallop pattern seems to be building up, but I should point out that the lower tine will later this week be below both of these uptrends. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.